Every second of every day, trillions of dollars, euros, and yuan move invisibly across the globe. We tap a card for coffee or transfer funds to a friend, hardly thinking about what happens behind the scenes. Yet every one of those actions connects to an unseen global network. This network is so vast and so influential that it silently determines the cost of mortgages, the strength of currencies, and even the stability of entire nations. The question is simple but profound. Who actually decides how and where that money travels? Many people assume that elected governments and parliaments control it. In truth, the answer is far more complicated and hidden in plain sight. Today, we are going to explore what I call the hidden banking web, a tightly woven network of international institutions, central banks, and private giants that quietly shape the financial bloodstream of the planet. At the core of this web sits the Bank for International Settlements, or BIS, in Basel, Switzerland. Most people have never heard of it, yet it is often described as the central bank for central banks. The BIS sets the standards that define how every major bank operates. Through frameworks like Basel III, it dictates how much gold and high-quality capital commercial banks must keep in reserve. When the BIS tightens these requirements, lending can shrink around the world. When it relaxes them, credit expands. A single committee meeting in Basel can influence the availability of home loans in South Africa, small business credit in Brazil, and bond yields in Europe, all without a vote in any parliament. This quiet power is one reason why insiders sometimes call the BIS the most important financial institution most people have never heard of. Radiating outward from Basel is a ring of powerful central banks: the US Federal Reserve, the European Central Bank, the Bank of Japan, the Bank of England, and the People's Bank of China. Together, they form a kind of informal but highly coordinated alliance. These central banks set the interest rates that determine the cost of borrowing and the reward for saving. They inject liquidity into markets when panic strikes, and they maintain swap lines, special agreements to exchange currencies, that can rescue entire economies overnight. Their combined influence moves stock markets, bond yields, and commodity prices in seconds. Politicians may argue about budgets and jobs, but these unelected bankers quietly decide the price of money itself. In practice, even sovereign governments often have little choice but to follow their lead. If a country resists global rate trends, investors can punish it almost immediately by dumping its bonds or weakening its currency. Below these policymakers lies the complex machinery that actually moves the money. Systems like SWIFT, the global messaging network, transmit payment instructions between more than 11,000 financial institutions. Clearing systems like CHIPS and Fedwire in the United States or Target 2 in Europe ensure that funds actually settle. New protocols such as ISO 2022 upgrade these systems by standardizing data so that payments can move faster and contain richer information. Private clearinghouses, CLS for foreign exchange, Euroclear, and the Depository Trust and Clearing Corporation for Securities quietly settle transactions worth trillions of dollars every day. These organizations seldom make headlines, yet if any of them stopped for just 24 hours, world trade and capital markets could grind to a halt. This is quiet power at a scale most people can hardly imagine. Surrounding the plumbing is a vast ecosystem of private giants and shadow players. Global megabanks like JP Morgan Chase, HSBC, and Citigroup act as the final clearing points for dollars and other major currencies. Asset managers such as BlackRock, Vanguard, and State Street collectively manage more than $20 trillion in funds, giving them enormous influence over which companies, projects, and governments receive affordable financing. Hedge funds, money market funds, and repo market participants supply the short-term liquidity that keeps everything running smoothly between settlement dates. Through complex derivatives and off-balance sheet vehicles, these private actors can create or absorb risk that rivals or even exceeds the GDP of major nations. Their decisions on what to finance, what to short, what collateral to accept, can move global markets without a single act of legislation. One reason this system remains largely invisible is its deliberate complexity. Technical jargon like Tier 1 capital ratios, cross-currency swaps, and liquidity coverage requirements make it almost impenetrable to the public. Responsibility is diffused across hundreds of committees and institutions. Each can claim it is simply following international best practices or market norms. This diffusion makes democratic oversight extremely difficult. And when crises erupt, Think of the 2008 global financial crisis or the emergency actions during the pandemic. The same small circle of insiders can act within hours, providing massive interventions without the debates and delays that accompany democratic decision-making. But even a system this vast and entrenched shows cracks. The 2008 crisis exposed how tightly interwoven banks can spread a shock worldwide in a matter of days. Sanctions on Russia after 2022 highlighted how payment networks like SWIFT can be turned into geopolitical weapons, spurring countries to seek alternatives. BRICS nations are actively experimenting with new payment systems and even commodity-backed settlement currencies to reduce reliance on the US dollar. Central bank digital currencies, from China's digital yuan to pilot projects in Europe, Africa, and Latin America, are being tested as parallel rails that might eventually bypass traditional networks altogether. Each of these developments introduces both risk and opportunity. They signal a world slowly preparing for a different kind of monetary order. Now, let me share my own perspective. In my view, this hidden banking web is both the strongest barrier to, and the quiet architect of, any coming global reset. On one hand, its members have every incentive to preserve the status quo. They profit from dollar dominance, the control of interest rates, and the fees that come from managing the world's payment highways. On the other hand, the very complexity and fragility of the system combined with soaring government debt and the rising appeal of gold or commodity-backed money may force these same institutions to accept a fundamental redesign sooner than most expect. This is where concepts like GESARA, a global economic security and revaluation agreement, and a coordinated gold-backed digital standard stop sounding like fringe speculation and start looking like plausible future frameworks. The technology and agreements for such a shift are already being tested quietly in Basel, in BRICS capitals, and in bilateral central bank deals that rarely make mainstream headlines. What does this mean for everyday people? More than most realize. The rules of this hidden system determine mortgage rates, job creation, retirement savings, and even the price of essentials like food and fuel. If a new global currency regime emerges, whether based on gold, digital tokens, or some hybrid, it could change the value of your savings, the cost of your debt, and the security of your pension almost overnight. This is why understanding who really moves the world's money is not just an academic exercise. It is vital knowledge for anyone who wants to safeguard and grow their wealth in the decade ahead. Some may argue that the system is simply too entrenched to change. But history shows that monetary orders do evolve, sometimes suddenly. The collapse of the gold standard in the early 1970s, the birth of the euro, and the rapid digitization of payment systems are reminders that what seems permanent can shift in a matter of years. Today's convergence of high debt, technological innovation, and geopolitical tension could well become the spark for the next great transformation. So where does that leave us? I believe the next global monetary reset might emerge from inside the existing framework, with central banks and institutions like the BIS quietly rolling out a new set of rules and technologies. Or it could be forced from the outside by coalitions such as BRICS, by decentralized finance networks, or by a new gold-based settlement system that gains critical mass. Either way, decisions made behind closed doors today will shape the financial landscape for generations. The hidden banking web may feel untouchable, but awareness is power. By understanding how it functions and by sharing that knowledge, we chip away at the secrecy that keeps ordinary people in the dark. Whether the next great monetary shift comes from inside or outside the current system, those who stay informed and think ahead will be best positioned to adapt. I invite you to reflect on this and to share your thoughts in the comments. Do you think the next big change will come from within the present banking architecture, or from a completely new structure built outside of it? Share this video with friends and family who care about the future of money, and don't forget to subscribe for tomorrow's deep dive into the forces shaping a global financial reset. Together, we can stay informed, prepared, and maybe even help shape what comes next.